Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for June 6th of 2021. We will be going through our standard agenda, look at the prior week's results, our currency strength meter for the week, fundamental announcements scheduled, and which ones we're trading. I'll look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledgers, a nice little uptick on the long-term ledger as multiple trades did close out in our favor, and we still have a bunch of trades open right now. We are carrying a negative open balance on these trades, but we do expect most, if not all of them, to come back in races. Last week was it was still a trending week, but we did have some significant pullbacks on some of the pairs. So we'll see how this week kicks off and play it by ear. On the intermediate term ledger, also a little bit of an uptick, bringing us back above positive territory. And we still have quite a few trades open here as well. This account also carrying an open negative balance as of Friday's close, but not as deep a one as on the long-term account. And like I said, I do expect some, most, if not all of these trades back. We are trading in the direction of the ongoing trends. And the short-term ledger, no significant change other than swap costs for the week, as we still have the same trade open that we have had for about a month now. We're coming on a month in 4 days. So that pound Canadian trade still there. It's pretty close to break even as the market closed on Friday. It's been carrying a loss, it's been at profit, and it's been at break even. So it's just going in all directions, and we're waiting for it. But right now it is pretty close to break even, so no negative open balance on this account. There's an opportunity for improvement. It definitely looks like we are starting to catch a wave. There are many ongoing trends. Last week did see us go more sideways and with a little bit of retraces across multiple pairs, but still, that is normal even within a strongly trending market. So it can be a zigzag. So it does look like multiple breakouts are happening, especially with the pound pairs on the upside and the dollar pairs on the downside. And we do expect those to continue. Of course, this isn't about predicting or expecting. We're just taking a look at what the market is doing and trading in that direction. But it does look like some of these are going to be sustaining themselves for quite a while. As I said, the dollar was ambivalent last week, but still leaning towards weakness, and the pound is definitely in a boom. And we may be on the verge of some really significant move. So this is a very good environment to be trading. Relative strength meter for last week, if we look at the rightmost column, we can see that the clear winners were the pound and the Swiss franc, basically winning against, well, almost every other currency. The only one that the pound didn't beat was the Swiss, and in that case, it was sideways. And same can be said for the Swiss. It did not win against the pound, went sideways, but won against everybody else. So some nice movements on Swiss and pound. Big loser, the Australian dollar and the Japanese yen. The yen just can't seem to catch a break. And on the Aussie, I have been expecting that retracement and even a reversal for quite a while. I think it's pretty much played out. And the euro, the Kiwi, and the Canadian were reasonably flat. They did move up and down by a few points, but no significant move last week, and the dollar was pretty evenly matched. And by that, I don't mean that it didn't move at all, but it won against as many currencies as it lost against or went sideways. You see the dollar gaining on the euro, dropping against the pound, gaining on the Aussie, no movement against the Kiwi, losing against the CAD, losing against the Swiss, and gaining on the yen. So the net of that was zero, but that doesn't mean that there wasn't any trending going on or even retracements in some cases. So bear in mind what those numbers on the right actually mean. And when you want to dig down, you need to look at each individual column and see whether the arrow is pointing up, down, or sideways. Okay, the calendar for this week, we have quite a few events that we're going to be trading. We have the Bank of Canada's interest rate decision on Wednesday. That'll be mid-morning. We have the European Central Bank's interest rate decision very early Thursday morning. And we have the ECB monetary policy statement that's the morning, about 45 minutes after the interest rate decision. So we will be trading those three events live, or you can call them two. We're probably not going to be dropping off after the ECB interest rate decision. We'll just hang on and continue through the policy statement. I think that at some point we're going to get some sort of significant news out of the Eurozone, and it's probably in our best interest to be there for that. I will also point out that Thursday kicks off the current G7 meeting that is going to be happening through the weekend. So it's going to be Thursday, Friday, Sunday. While that is not a tradable event per se, the press releases and announcements coming out of the G7 meeting have the potential to significantly move the market. So you have to be paying attention to the news cycle and every bit of information that comes out of that G7 meeting. This will be the first G7 meeting with President Biden at the helm of the US. So again, very, very significant. You need to pay attention to stuff like that, even if it's not a distinct. Okay, that covers all the, I guess, housekeeping, we can call that. We're going to the charts now. Oil breaking out yet again. We have a 2-year high. It's broken all the way up to $70 a barrel. So a very bullish week for oil. And of course, the Canadian dollar has been benefiting from that as well. Where oil is going to stop, not too sure. It may go all the way back to the previous highs around the $80 to $90 range from about 3-4 years ago. It may go sideways. Who knows? But right now, it's pretty much at its most bullish since the COVID scare began. Euro dollar had a retrace week, so we saw the euro losing ground against the dollar. On Friday, it tried to turn around, not enough, a little bit too late, couldn't quite manage it, but did do a nice bit of a recovery on Friday, or at least stop the bleed. Very eagerly waiting to see what this new week is going to bring us with the dollar pairs. I am going to sort of guess that we're going to have another push towards the top into dollar weakness, simply because, well, I think that's the lay of the land. Pound dollar, more sideways than anything else. There was a bit of a bearish retracement, so the dollar did end up winning for the better part of the week, but Friday had a nice bit of a push back towards where it had started. USD JPY, again, the yen just can't seem to catch a break, except on Friday, it sort of did. We had a very deep retrace on Friday, but not enough to really move the needle to any significant degree. It's still moving up. It's still sitting on a trend line, a bullish trend line. It's broken out of the wedge towards the upside. So again, the yen just isn't able to do anything at this point. At some point that will end, but of course the key question is when, and we're not going to try to predict that. We'll just wait for that trend line to break. If I see a convincing break, we will be going short immediately. USD CAD, on the other hand, is benefiting from the oil price improvement, and the Canadian is taking everything it can out of that. It has been sideways for the last 2 or 3 weeks, but it is at the very bottom of the chart. So there has been no significant pullback. It's just sort of waiting for the next shoe to drop, and it might break that bottom and keep going. USD Swiss also at support. It has done more of a retrace, or at least a retrace, unlike the USD CAD. But also on Friday, it made a significant move back down, even breaching support. So still in a very nice bearish pattern, and we're still looking for a trip towards the bottom. Aussie dollar, and I see Australian is played out. I've said that multiple times, not just on this call, but in previous weeks. It has been going sideways with a bit of a bearish slant, breaking trend lines, breaking support. On Friday, it also retraced back up in the Australian dollar's favor. But, a day late and a dollar short, it just barely went back to where it had started the week. So more of a flat week for this one, but still the Australian is starting to be a liability. I think we're going to have a very good opportunity of shorting the Aussie in weeks and months to come. Indeed, we've already been doing that quite successfully with the pound Aussie, but we'll get to that. Okay, next is our Kiwi dollar, and this one also is showing signs of support breaks. On Friday, nice, credible bit of a retrace back up, but not enough. It was still well below the wedge as the week ended. I still think that the Kiwi may have one more push left in it, taking us to the top, but right now I wouldn't bank on it. Aussie Canadian hit the bottom, very, very bearish week, hitting the bottom and then bouncing back up on Friday. But it was a significant pullback on Friday, going all the way back to where the week had started. So it undid the whole week's movement in one go. Still, it was a nice bearish push. Euro Swiss is now for the fourth, fifth, or sixth time at an intermediate level of support, which it has been unable to break for more than a month. And well, anything can happen. We've been ignoring this one because it's just been very erratic. It's still in a downtrend, so it's still moving down towards the bottom of a wedge, but without any sort of momentum to speak of, and thus not giving us any opportunities for more. Euro pound also going sideways. It's tracking the bottom of the Ichimoku cloud. It did break a trend line, but again, the break was sideways, so not as significant. We still have the hedge trade open here in case it goes up, but hey, it's not going down either. It's just staying pretty flat. So as long as support isn't broken, there's every chance that at some point we're going to get a chance to trade it back up. We'll see. Euro JPY breaking the top the week before, staying above most of the week, only on Friday dipping below resistance for the first time in those 2 weeks. Another one where I'll be very interested to see how this week kicks off in case it gives us an opportunity for the next push. We're already in this trade on the long-term account, I think, so we'll continue monitoring that, but we might be making more trades on this. Euro Canadian also very near the bottom of the chart, tracking an all but last level of resistance right now. So it is very, very bearish for the time being, but based on the fundamentals, I think there is a higher likelihood of this one going up by anywhere between 300 and 800 pips, taking us back into that blue diagonal that you can see there. So we're on the lookout for that. It'll happen when it happens. Pound JPY also in breakout territory. It's just lacking one more push to break the top of the chart. We've been trading this one up very successfully as well. And well, we're waiting for the next movement here. It shows no sign of retreating. It did have a sideways week, but it's at the very top of its most recent movement. Aussie JPY also at the very top, but unlike the pound JPY, I do think the Aussie is headed for issues. So this one might go sideways for a long time, or if the Aussie starts weakening more quickly, or the yen catches a break, this one may just take a dive anywhere from the middle of the chart to the bottom. So fantastic opportunities on this one if we're patient and wait for the right entry. Euro New Zealand is in a rather sideways, if wide range, and it was a bullish week. It went up every single day except for Friday, when it went back down about halfway back to where it had started the week, sitting right on top of a level of support, a very shallow trend line. Um, this one could go either way, and there is opportunity in both directions. So this is one of those for wait for it to happen and then catch a ride if you're quick enough. And last but not least, we have I'm sorry, this is not the last, the second to last, pound Canadian. I think there's a good opportunity still for a trade up, and we have a couple of trades open in that direction. It has been slowly trending higher, more sideways than anything else. But the good news is it is not going down. So that pretty much validates at least our premise for the entry. But we're still waiting on that push. We don't need much. Anything here is going to start giving us some nice profit since we are sitting on break even trade. And pound Swiss, I guess it was third to last. Pound Swiss also going sideways, and this one may continue sideways for quite a while because the Swiss franc is starting to gain strength or regain it. Also, the pound, so we may have a strengthening currency playing against another strengthening currency. That is the very definition of sideways market. And now, finally, last but not least, the pound Aussie. This has been the biggest mover of all the pound pairs. Probably the only one coming close is the pound dollar. But the pound Aussie has been much quicker to move as the Aussie weakened and the pound strengthened. This one just skyrocketed. It's all the way at the top of the chart. We had a massive retrace on Friday. And again, Friday tend to be retrace day simply because a lot of traders want to bank their profit and not be worried over open trades on the weekend. And of course, when traders go in the opposite to what has been the direction, it drives the market in the opposite direction. That's pretty much what the buying selling equation does. If there are more buyers than sellers, then things go up. If there are more sellers than buyers, then things go down. Obviously, a bunch of buyers on Friday suddenly turned into sellers, and it was quite a decent drop all the way back to the trend line. But what this means is that if the movement isn't stopping for some reason other than, hey, it was Friday and we don't want to worry on Saturday and Sunday. And this one is giving us probably the best opportunity as we kick off the week to trade it back up to where it was. Indeed, at 5 p.m. when the market opened, I did jump back into this trade. We had already taken profit on Thursday or Friday, and I now got us back in at the very bottom on the intermediate term account. I'm not going to report that in the update to go out. It's already been put into the ledger if you want to take a look at that trade. If you have the copy trader, of course, it will have executed on your accounts already. I will be reporting this as a new trade in tomorrow's update, simply just to up and running the way I have it. I don't like to do updates on the open of the market. So that is where we are. That's all the chart setups we see in progress. Of course, the pound continues to be in breakout territory. It's the most bullish it's been since Brexit, really. The USD continues to crash, even though last week it didn't move much. There is still nothing positive to say about the dollar. The Australian, it's still looking played out, but is not quite retreating just yet. While I don't think it's going to get any stronger, it doesn't seem to be ready to give up the ghost either. The yen, on the other hand, and I've said this, it's going to be coming back inevitably at some point, but again, it's in no rush to do that. And indeed, the yen continues to weaken for no good reason to simply doing that. So we are trading it into yen weakness, and to me, that's the most logical thing to do. I see a lot of other traders out there when I bother to take a look at what they're doing. They are very surprised that the yen is growing weaker and they're still trading into yen strength. Well, good luck with that. You have to trade in the direction the market is. And that's what we're doing. And actually, those yen trades have been adding quite a nice chunk of profit to our trading this year. And the Canadian pairs, the Canadian, as I said, is riding that oil boom despite a bit of a lackluster jobs report last week out of Canada, where they did miss their targets or their expectations, but still oil, the labor pool in Canada is not that big, all things considered. So I mean, when they create 30,000 jobs, that's a huge, massive, and significant event. When here in the U.S., we would say 30,000 is a rounding error. So it is comparative. I think the more important thing is that oil is doing well, and that's going to bring in more money into the Canadian economy than anything that's happening job wise. And looks like the market for now is agreeing, but of course, the market is very fickle and anything can and might happen. So, as always, trade very carefully. That's it for the main part of the presentation. A few parting words, as I always like to add at the very end. And today's, or this week's rather, is going to be money management. And this is simply because it makes sense to talk about that right now. In times like these, when the market is starting to trend, I have to warn people why money management is going to be one of their very necessary tools. If you want to maximize your profit and minimize your risk, you're going to have very strict rules on how much money you can have placed in trades at any given time. And you always have to have enough money on the sidelines to weather any retracements going against you. So volatility is not going to help you. Market is turning against your trades. If you don't do this, you're going to get a margin call because you will not have enough money in your account, which means that your broker will close out your trades arbitrarily. They don't care which ones they close out until you're back on their margin. You don't want that to happen. They have to leave enough money unused in your account to make sure you don't get margined out. But you also have to have as much money as possible in play, or you're not going to make enough money. If you don't have at least 50% of your account being traded at any given time, and even when you win, your returns are just going to be, well, lackluster. That's the best word. Even if you are, like I said, winning pips consistently, you're just not using your account properly. You're not using it to your best advantage. It's going to be a tightrope act. You cannot have too much. You cannot have too little. Sort of like Goldilocks there. So remember, money not being traded that is not needed for margin is idle money. You have to have your money working for you, and you have to reserve enough money that if things don't go your way, your account is not margined out. If you have any questions about that, email me. I'll be happy to explain it to you guys. You know, contact me in whatever way you usually do. Okay, folks, that's going to be it for me this week. Do we have any, or this start of week session rather, do we have any questions or comments? Okay, thank you very much, folks. That's a wrap. I will see you tomorrow, regular time for those of you who are subscribers. The rest of you have a great week and see you next Sunday. Bye-bye.